This is remarkably bullish for Tesla, and it's the first institutional piece that I've seen talk about the Model Q. Now, there have been rumors about the Model 2 for a very long period of time, but I have to say this piece, along with what it says about robotaxis and future models, is really bullish. And as like an OG original day Tesla bull from the mid 2010s, which I know there were people who beat me to it, but this is finally actually really exciting again, if it's right. This is a Deutsche Bank piece. We don't know that it's right, but let's look at it. 2025 earnings preview. Hey, okay, this part a little boring. China slightly weaker than expectation. Yeah, all right, we got some more Chinese competition, but let's be real. In America, that's our big market. Don't really have a lot of competition. The more tariffs there are, the more we incentivize domestic production. And guess who a domestic production company is? Tesla. So Tesla did also deploy less energy storage than expectations, and the stock is probably already pricing in the expiration of the $7,500 tax credit at the end of September, the expiration of the purchased battery and solar credit systems for homes at the end of the year, which is different from the expiration of the lease and power purchase expirations, which happen in a few years to the benefit of companies like Sunrun and to the detriment of a company like Tesla. But Deutsche Bank, once they get this sort of negativity out of the way, they get into some really interesting stuff. They actually see average selling prices quarter over quarter going up to 41.6K, which is great. So we're about to fall into the 30s. They also see upside in automotive gross margin, absent credits, hopefully coming in at 16.9 when we have earnings on Wednesday. I'll be covering those earnings, so I hope you're there with me. That said, I want you to take a specific look at this. Looking at the rest of the year, we maintain a cautious stance on volume, just 1.58 million, which is another 12% decline, which also doesn't sound great. But wait a minute, what is this? With the timing of Model Q rollout as the key swing factor, we now assume only 25,000 units of production in Q4. Wait a minute. Could this potentially finally be that smaller, lower cost $25,000 car we've all been waiting for? Could this finally be that smaller, lower cost car that the board of directors wanted, but Elon rejected because he wanted to go all in on autonomy? Could this finally be a capitulation by Elon, or maybe an alignment with the board that, all right, I'll do the robotaxis, you guys put that lower cost car out, and we'll see who makes more money. Hint, in the future, it's obviously going to be autonomy, FSD, AI, Optimus. But for now, this will keep a lot of shareholders really happy and could expand Tesla's total addressable market again, which is frankly really exciting, because for now, it's sort of at the moment where we are with Tesla, we know we're really excited about self-driving cars and robotaxi, but what we're most excited about, frankly, is being that ambitious Tesla customer who's going to go buy more Tesla vehicles. It's one of the reasons when I retweeted this, many of you agreed with me. I mean, like I personally, I think I'm maybe slightly on the more critical side, and therefore I kind of get, if you will, downgraded in terms of how much engagement I'm eligible to get on X, which is fine. I get it, Elon. But this has 69 retweets and 1.3 thousand likes, and it's me quote tweeting this, hey, this is exactly what we want, Tesla. Make great cars, and many of them. And I think that's just because there are many enthusiasts like you and I, and frankly, all of our kids. I mean, I got the Cybertruck, and our kids, they love Teslas. We want to be able to spend more money on Teslas, smaller Teslas, bigger Teslas. Just give me more Teslas that I can add to the Tesla family. For now, at least, while we work on robotaxis and the other thing. Okay, so with that out of the way, and forgive me, I'm also kind of like, I feel like I'm talking a mile a minute because I've got to head to the airport, prep the plane, got to take off, got to do some work, but that's all right. I'll handle it. But anyway, take a look at this. They already include this Model Y long, the extended version, the 6-inch longer wheelbase in China. They already include that as potentially generating 50,000 units in Q4. And they also expect a Model 3 Plus to come out in September with cells that could potentially deliver 500 miles of range. This is incredible. This would be a whole revision to the long-range Tesla Model 3. Really, really exciting. They also say that prior releases of cars like the Xiaomi YU7, which is the current release, which they compare to the SU7, don't usually cause an impact or drop in sales of the Tesla vehicles. And current lead times for the new YU7 are over 50 weeks. So even though it dropped with a lot of enthusiasm, we're not really worried about it. What's also interesting is they actually say that the Model Q was supposed to launch in the first half of 2025, and most of the ramp is now going to occur in 2026. Unfortunately, though, mainly in China, which I'm bummed about this part, because originally, everybody's hoping for this $25,000 car in the United States, but there's the question that will that be cannibalistic, or will that cannibalize sales in the United States? Maybe. Do Americans want a two-door car? Probably not. And in China, you've got an extremely competitive market where a lower cost Tesla, in the face of all this competition in that, $30,000 to $40,000 range, could be really good for reseeding that market traction in a really important market. Shanghai, this is for years been what led Tesla to be Tesla. The inexpensive Chinese manufacturing and the support of the Chinese government has been really useful for Tesla. Not to discredit the usefulness of some of the EV credits and that over here. Obviously, losing our ZEV credits. A lot of these pain points are probably already built into the stock. And don't get me wrong, I'm not here to tell you that I think the stock is cheap today. I think we're still trading at a little bit of a premium to where typically I like, but it's probably, frankly, because you're in an environment that says, hey, we're not just looking at earnings from cars. Now, I don't think Wall Street is either, but I have to say the expansion that they're about to talk about on Robotaxi here is incredible. By the way, if you missed out on coupon code Mr. Too Late, there were a few of you that hit us up, as far as I'm aware, that said that you basically just missed the coupon code. If you have any questions or if it's not working for you or whatever, just email us at staff@meetkevin.com. I'm not trying to cut people out here, but we are going to be raising the price very soon. Okay, so look at the earnings per share. Earnings per share growth is expected at 49.6, 31.2, 31.3, and 50.6. By the way, probably one of the better months right now with people joining the Alpha Report. I'm not sure it's because you're resonating with sort of the alerts or the fundamental analysis we're doing or the Trumponomics lectures we've got coming out on the new Big Beautiful Bill, or it's an indicator of like consumers, right? It's maybe more confidence in markets in that right now, which is kind of exciting to consider. But we're at an average over the next 4 years of 40.67 EPS growth. And if I take the current share price, let's call it 330 divided by 1.84 divided by 40-ish. Yeah, you're trading for like a 4.4 peg. So the market's definitely pricing in a bit of euphoria. Although then again, it is across the entire market right now, like every stock, right? So, it's like, do you want to be on the ride or not? All right, recall Tesla launched with, okay, this is about Robotaxi. This is wild. So he launched with a 10 to 20 car fleet. They actually think Tesla, and this was really, really bullish, is going to expand to 1,000 vehicles within the next 6 to 9 months, expanding coverage in Austin and entering San Francisco by early September, Phoenix underway, and potentially a few cities in Miami. Waymo currently only has 1,500 vehicles on the road and is targeting 3,500 by 2026. We might have more Teslas on the road than Waymo does. Elon also suggested that we'll have better supervision or like teleoperator support. We saw that Ellie video where she kind of got stuck a little bit. Some people say she was out of the range, although maybe it was like out of the old range and in the new sort of like geo fence space, whatever. They also say that one of the benefits is that they can leverage their end-to-end AI to sort of lead this expansion, which is very similar to what I think it was Morgan Stanley said. They're like, oh my gosh, Elon can scale so much faster without LiDAR. Well, duh. That's always been the point. Oh, it was actually JP Morgan. We don't think investors fully appreciate the potential of the sensor parsimony as practiced by Tesla's current Robotaxi fleet, purposefully depriving vehicles of LiDAR to force the vehicles to achieve a different pace of learning. So basically, he's making this rough argument that maybe the AI can expand faster, but you could also expand the fleet faster. So when you put all of this together, it's really no surprise that there's enthusiasm and bullishness around Tesla stock, because a lot of people don't recognize how incredible artificial intelligence is. I mean, really, when we look at artificial intelligence, for example, at House Hack, which we've got a big AI announcement coming up, probably not going to be today because we've got travel now, so it might end up getting delayed until next Saturday. But in Q4, we plan to start licensing real estate AI software. We'll probably end our fundraise before then because we think the valuation of the company will be substantially different when we're actually licensing software. Think about like FSD for real estate, right? But we're really excited about that. And so, I mean, obviously we're really excited about that. But we're in a place where we look at this and go, wow, there, like this AI revolution, remember the two OG AI plays. And we talked about this for years on the channel, Palantir and Tesla. And now Tesla is actually very close to helping take over what Waymo's been doing for how many years? Now, I get it. People are like, Waymos are more expensive. That's probably what's limiting their expansion. They're partnering with Toyota. So in fairness, that is something where like they're starting to wake up. And I think it's partially because Elon's about to eat their lunch. And so they're like, oh, we need a manufacturing partner ASAP because we're getting screwed here. So really this, and it's kind of the same thing that you're seeing with like the Lucid Robotaxi partnership. Remember, Lucid is partnering with a company called Nuru AI, which is basically just a wrapper for NVIDIA's drive platform. It's not like its own proprietary LLM like what Tesla has. I shouldn't say LLM. Its own proprietary neural net would be the better way to put it, which is amazing. So it shows you that people are almost like desperate to catch up, which is exciting. Again, I'm not a fan of the valuation where it is now, and I also still have recessionary concerns for the market, which I've had, for about a year now. I don't really let those recessionary concerns change how I'm investing because I'm throwing a lot into House Hack and have thrown a lot into House Hack just because of my excitement for artificial intelligence and what we're doing. But then again, I'm biased, right? If you wanted to invest in House Hack, read the disclaimers and disclosures and everything, right? Like, I'm the CEO, I'm a little biased. That said, I mean, I'm wearing the House Hack shirt, okay? Like, that's my like vacation and work shirt. It's just House Hack stuff. So, to me, I just look at it as, what do we do with House Hack in the sort of like, how do you reconcile that with recessionary concerns? Well, we reconcile it by having cash to buy homes in the event there's an oopsie doopsies in the market. I generally like the third and fourth quarter anyway. So we'll be going shopping between September and November is usually a big shopping environment for us, around Black Friday sales. Then we also develop our pet project of AI at what I think is a low investment but high ROI. And the beauty of that is we're really in a place that says, hey, there's lots of upside, very little downside with artificial intelligence licensing. So we're really excited. But the more we work with AI, the more we study it, the more we're like, yeah, Tesla might zoom past Waymo here pretty quickly. So it's pretty impressive. Anyway, thanks so much for watching. We'll see you in the next one. Really appreciate y'all. Check out the courses if you want over at meetkevin.com. Any issues, email us at staff@meetkevin.com. We'll take care of you. Thanks. Bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.